Hello, Nigel here from NigelChart.com again, and today I want to share with you quickly a shocking thing that I found out, which is Midas is closing. So if you go to YouTube or if you check out this video, you find out that the CEO of Midas has posted up a video of him explaining why Midas is shutting down, their reasons, and where they're moving to, right? So I'm not going to play the video for you. I will include in the notes below. What I want to share with you is Midas was one of the sites, one of the places I wanted to put my crypto in to get yields and farm, right? So if you go to the website, you click over here, scroll down, click over here, you will see this website where they show, see, earn the highest yields on Bitcoin, Ethereum, USDC, and DeFi. How I chanced upon this is when I was when Crypto.com's staking yield dropped tremendously. It dropped from 12% per annum, right? It dropped all the way down to like 2-3%. I think 2% blended, and that was quite a big drop for me. That's what 12% to 2% is ridiculous, right? It's like 6 times drop, right? And I chanced upon Midas, and I'm looking at Celsius, Midas. I think these two. Was there any other? I think these two, and eventually I did not put my a single cent on Celsius, and neither did I put a single cent to Midas. So Midas, I was looking at because it was offering up to 17.3% per year in returns, right? 8% BTC, 10.3% on Ethereum, no limits on lockups. So they seem quite generous. And then when I go to their website, I go into their I go to their Reddit. People were just saying that, move there. Everyone's potting there. There was so much hate for Crypto.com because Crypto.com was the first company in that sense, right, to kill off their benefits, their staking, and so many things they kill off, and there was so much hate for them, right? I decided not to go to Midas, and I decided not to go into Celsius, and just decided to take out some profits and stake the minimal returns in Crypto.com, and leave it be because Crypto.com was regulated. It's much more stable. It's boring but stable, right? Okay. And so when I chanced upon Midas closure, I felt that this is a long time coming thing, right? Okay, because 70.3% is really high, and I think it's usually when things are too good to be true, they don't tend to last that long. It's either going to be a rug pull or scam. I do not know, right? Okay, but for me, I want to take things a bit safer. But lol, right? I mean, crypto, as I mentioned again and again, it's highly volatile. So don't go balls deep into crypto, right? I always share that up to maximum of 25% of your net worth can be in high risk, high returns, high potential return stuff like growth stock, tech stocks, and even cryptocurrency. Because it's so volatile, right? As you can see in the market, with the bear market right now, Bitcoin has dropped 70%. Ethereum is anything, right? Okay, but same can be said for Zoom, same can be said for Netflix, Facebook, even Tesla just dropped 61%. Okay, so 25% into high risk, high potential return stuff. 75% of all your net worth should be in stable stuff, stable boring stuff, real estate or index funds or stable dividend stocks. That's it, Okay, so back to this, right? So Midas company is closing down. So if you see that point on top here, Midas closure, reasons and pivot to CDFI, I don't know what's that. So I click on this link. So then they write a blog post here about what and why. So Trevor, the CEO of Midas Investments, saying that he is sad that Midas platform is closing down. In the spring of 2022, Midas DeFi platform has lost $50 million, okay, which is 20% of their 250 million assets under management. Okay, so when Celsius and after Celsius FTX events, the platform experienced over 60% of their assets under management being withdrawn, creating a large asset deficit. Okay, based on this situation and the current CeFi market condition, they decided to close it, right? Okay, let me see what they're saying. Despite the damage done by this event, the only way to move forward is to build something relevant for this new market. They aim to focus on a new project that aligns with the vision of CDFI. What's CDFI? Centralized, decentralized finance. Okay. This project will be fully transparent on-chain and built with the goal of offering a new and improved investment experience. Okay, so this is the challenge that they face. Okay, so in 2021, they revolve around DeFi yields, which was the highest yield in the market. Okay, then in the quarter 21, first quarter 22, there's rapid growth, and the AUM increased by 15 times, which is quite good. But we brought on a lot of stress. The AUM growth forced them to restructure their portfolio and diversify DeFi into almost every investment that's presented. They reduced the rates in February for the first time when we cannot sustain the yield. Okay. Meanwhile, crypto DeFi market faces challenges, and they've suffered loss of 20% or $50 million. So 14 million lost in the Ichi protocol and $15 million due to DeFi Alpha protocol, position value decreasing. So in response to these losses, so Midas portfolio had held more FTM tokens that the users had on the platform. Oh, I see. Okay. So that means that they had just more. They held more FTM tokens, but FTM is Phantom, I think, right? Okay. So so they expect outflow of about 60% due to Luna sales at FTX. So then they cannot sustain this fixed yield model. So over the 8 months, they have been focusing on identifying markets to balance assets liabilities, including launching CDFI strategies, fundraising, opportunities to DeFi, So basically they cannot cover daily payouts to users due to the asset deficit. So they said that only C-level employees were aware of this. Everybody else was not aware. Okay, so they seem to have opened up everything for sure, but it's not audited. So total liabilities 115 million, total assets 51.7. Okay, deficit, right? So this is what they owe out, and this is what they have on hand. There's their shortfall, 63.3 million. So this 63.3 million is because of this. Okay, issue protocol, Alpha portfolio, Harmony Bridge hack, Phantom price change, Midas token sales, illiquid market. Okay, Midas boost. Okay, so on and so forth. So they try to balance their assets and liabilities. So they say that withdrawals disabled for a while. So they say that the balancing is 48%, but due to withdrawals on the platform and swaps on Midas on the last 4 days, the final number is 55% of the balance. So basically, you get back about, if you had any money in them, you get back around 45% after minusing of 55%, right? So the good thing is for small balance users, less than 5,000 will not have their balance adjusted from the deduction earning. So that means that if you have 5,000 or less, you get the whole thing. Those who have more will be hit hard. So the adjustment will be compensated in Midas tokens. This will be a problem. You give Midas token, but Midas token will be no value already, right? Midas tokens will be swapped for the tokens of a new project. I see. So they're basically sort of forcing people to take on the new project. I'm not sure whether that's a good idea or not, unless they have no choice as well. So if Midas has no choice, users have no choice. I think what should happen is that they should just pay out whatever they can pay out to the maximum, and don't force people to be paid in the new token. What should happen is that they should pay out as much as they can, and anybody who will go with that for the new project can buy in at a discounted model rather than forcing them to go, right? If I understand correctly, see the adjustments, let me see, users with balances lower than 5,000 will not have their balances adjusted other than the deduction earning. Okay? So adjustment to users BTC, ETH, and stablecoins will be compensated in Midas tokens, which can be withdrawn and swapped to the new project. Okay? We'll stop providing liquidity. Okay, so let's give example. So if you have balance 5,000, minus off the all-time reward, that means you have 4,008. Basically, they will claw back their all rewards all time. Okay, if you put in 5,000 so far and you made 5,000, so you get back 0. Okay, just take note. Okay, in the second case, if your balance is 5,000 and your all-time reward for a larger deposit are 10,000, then of course that's what I mentioned, it's gone. In third case, if your balance is 15,000 and you have the 2,000 all-time reward, they first deduct 2,000 less 13,000, and then they will multiply by the reduction rate, which is 555%. Painful. It's painful. It's odd. I would think that the best way is actually to apply the 55% to all, right? Not just larger than $5,000 holders, because it's the issue of fairness and faith. In the fairness, where people, whether you have less than 5,000 or more than 5,000, every customer should be treated the same. In fact, I would say that customers who park more money should be given more of a discount for the amount of faith that they have in your business, in your company, for risking more. Not mean more risk, more reward. But then again, more risk, more pain if it tends to fall down right now. That's what's happening right now. So based on how much they deduct from that balance, they will give Midas tokens and compensation based on the token, but based on the price of the announcement date. Oh, I see. So if you lose more, you get more as compensation for the next project. Okay, I can accept that, but still, pay up. You got to make it as fair as possible to all. Okay. So the new project, they're talking about a new project, saying that the Midas team estimates that the demand for transparent DeFi resources from retail and institutional clients will reach around 100 billion in the next 5 years. To meet this demand, they plan to go on scale verifiable tokenized CDFI exchanges for both CFI and DeFi users. So let me see. These strategies will include yield-bearing Bitcoin, Ethereum stablecoin with mint and bit functions, as well as treasury that holds liquid DeFi yield positions. Okay. So the new project's business model will involve a revenue share of Ethereum transferred to Midas token. They plan to hit a market of 200 million within 2 years. Holders of the Midas token will receive a share of revenue. Revenue shares. Sound a bit like KuCoin. But KuCoin is based on trading fees. Okay. So then they share about the new project. Okay. I mean, this is, at least there's something to look forward to. But right now, I'm so sorry if you have balances in Midas and you've taken a hit of 55%. I hope you don't have a big position. But if you do have a big position, take out whatever you can. I'm so sorry for your loss. As I said before, crypto is risky. It's speculative. You take out as much as you can. Okay. For those who have dragged along into the new project, just hope that the new project will help you make back what you had lost, and then some, and then more profits, right? So I can't speak I can't comment on the new project. I want to see how they handle this liquidation closure, right? And to take it as fair as possible to all their clients. You know, I feel sorry for you guys who lost money. I hate losing money also. I've lost money being scammed, being ripped off, having rug pulled on me. But as this CEO seems to be trying to share with you what they're thinking, okay? And he also apologized to anyone who lost money, okay? He said, I will do my best to make sure that you can recoup your loss in the new project. Okay, again, he apologized to all Midas holders who will be affected. He said, I understand that many of them put faith in him and his team, suffered the most, and he's deeply sorry. I promise to do my best in the new project. Okay. So, I mean, I think it was good while it lasted, and I hope that you guys who made money, you made more than you lost through Midas, and hope you drew your profits and move your profits elsewhere. But that these things do happen, so roll with it, take out as much as you can, and diversify and take your profits, okay? So, roll with it, take your punches, suck your thumb, and our fingers as we hit towards the end of the year. It's not a nice year to end the year with, but I'm expecting more and hoping for more in 2023. So hang on in there, guys and girls who are growing your business, growing your pot of money, growing your portfolio. Remember, 75% in boring, safe stuff, but at most 25% in risky, speculative stuff. Okay, take your profits and then reinvest them. Take care.